You check the transaction history. Nothing is missing. No late fees, no missed payments, no unauthorized charges. It feels like a glitch, a digital error. Think about your card with the $5,000 limit. You spent $4,000, a significant portion of your available credit. You paid it off in full, every cent, well before the due date. To you, this is perfect financial management. To the bank, however, the timing of your statement matters more than the payment itself. At the exact moment your statement closed, your account showed a balance of $4,000. That is 80% utilization. The automated systems scanning your file do not see the payment you made later. They only see that snapshot of high debt. They flag that 80% as a signal of financial distress, a risk factor that triggers an immediate score drop. You are being penalized for the timing of your spending, not your ability to pay. It is a trap built into the architecture of the score. You played by the rules of punctuality, but the system played by the rules of ratios. You try to fix the mess by simplifying your life. You look at that old credit card you opened years ago, the one you barely use anymore. It is just sitting there, a loose end in your financial history. You decide to close it, thinking you are being responsible and organized. You click the button, confirm the cancellation, and wait for the system to reward your tidiness. Instead, the score dips again. You have just deleted the anchor of your credit history. By removing your oldest account, you have shortened the average age of your credit, and the algorithm views this as a sudden loss of stability. You are being penalized for cleaning up your own records. Then, you try a different path. You walk into a store, see a sign for a 10% discount, and sign up for their credit card. You figure it is a small, smart move to save money. But the lender performs a hard pull on your report the moment you apply. That single inquiry hits your file like a red flag, staying there for 2 years, shaving points off your score immediately. You wanted a discount, but the system saw a desperate borrower hunting for new credit. You decide to stop applying for cards and look at your credit mix instead. You have plenty of revolving credit, but that is all you have. You realize your score has hit a ceiling because you lack an installment loan. The algorithm demands a variety of debt to prove you can handle different types. Without a car loan or a mortgage, you are trapped in a lower tier of creditworthiness, no matter how perfectly you pay your bills. It feels like a rigged game, where the rules change just as you think you have mastered them. Then, you encounter the most infuriating flaw of all, the reporting lag. You log into your bank, check your balance, and see that you have paid off every single cent of your debt. You feel a sense of relief, expecting your score to climb back up. But when you pull your credit report, the bureau still shows the old balance. The lender has not updated the system yet. The data is stale, a ghost of your financial past. You are being judged on information that is already weeks out of date. You have done everything right, but the system is blind to your current reality. You are stuck in the gap between your actual financial health and the outdated snapshot. It is a delay that keeps you locked in a state of artificial risk. Just when you think you have accounted for every variable, the system hits you with a ghost. You pull your full credit report, scanning for the reason behind your stagnant score, and find it buried in the fine print. A medical bill from 3 years ago, or perhaps a final utility charge from an apartment you left behind, has been sent to collections. You never received the notice. You never saw the bill. Yet, there it sits, a black mark on your record that you did not earn. It feels like a betrayal of the process. You have been meticulous, tracking every payment. Yet an external error is actively dismantling your financial reputation. The collection agency does not care if the debt was valid or if the notification failed to reach you. They simply report the delinquency, and the algorithm treats it as a failure of your character. You are now forced to play detective, digging through old files to prove a negative. You have to file a dispute, wait for the bureau to investigate, and hope they acknowledge the mistake. It is an exhausting cycle. You decide to take control of your interest payments by moving your debt to a new card with a lower rate. It is a logical, calculated financial move. You initiate the transfer, expecting to see your debt consolidate and your burden lighten. Instead, the system reacts with hostility. The algorithm processes the new liability, sees the sudden influx of debt on the new account, and triggers an immediate, sharp dip in your score. You watch the numbers fall, feeling the frustration of being penalized for trying to save money. Then, the second blow arrives without warning. You check your primary credit card account and find that the issuer has silently slashed your credit limit. They did not notify you. They did not ask. They simply reduced your available room to maneuver. Because your balance remains the same, your utilization ratio spikes instantly. You have done nothing differently. Yet your profile now screams risk to every automated system in the country. You are trapped in a cycle where your proactive financial management is treated as a sign of instability. The bank sees a higher percentage of usage and flags you as a danger, ignoring the fact that your total debt has not changed by a single dollar. You are fighting a war against a machine. You think you have accounted for every possible error, yet the score continues to slide. You pull the detailed credit report again, looking for a hidden variable. You find it under the Authorized User section. Years ago, you agreed to help a family member by attaching your name to their account to build their credit. You never used the card. You never even saw the card. Yet, the agreement remains active. You check the payment history for that account and see a red flag, a missed payment from last month. The system does not distinguish between the primary account holder and the authorized user. It sees the delinquency and applies it to your record. Your score drops as if you were the one who failed to pay. You are now paying the price for someone else's financial negligence. The bank does not care that you have no control over that account. The algorithm sees a missed payment linked to your social security number and flags you as a high-risk borrower. You are effectively shackled to their financial behavior. You call the bank, but they tell you that the reporting is accurate because your name is on the account. You have to convince the family member to remove you, or you have to close the account entirely. It is the ultimate betrayal of the system. Your hard-earned reputation is being dismantled by a mistake you did not make, by a person you were only trying to help. You decide that the only way to win this game is to stop playing. You pay off every remaining balance, lock your cards in a safe, and resolve to live entirely on cash. You assume that silence is safety. You believe that by avoiding debt, you are becoming invisible to the risks that have been dismantling your score. You wait for the stability to return. Months pass. You check your report again, expecting a clean slate. Instead, you find a void. Because you have not used your credit, the lenders have stopped reporting data to the bureaus. You have successfully created a thin file. The algorithm does not see a responsible person who avoids debt. It sees a ghost. It has no data to measure your reliability, so it treats your profile with the same suspicion it reserves for a bad borrower. You are penalized for your caution. You are punished for your lack of activity. The system demands that you remain a participant. You stop fighting the machine and start learning its language. The first step is simple. Keep your credit utilization below 30%. You set up automatic payments for your smallest balance to ensure you never miss a cycle. You review your accounts and decide to keep your oldest cards open, even if you do not use them, to protect the length of your history. You create a recurring alert on your calendar to pull your credit report every 3 months. The first time you do it, you find a utility charge that was sent to collections by mistake. You file a dispute, provide your proof of payment, and watch the negative mark disappear from your record within weeks. You stop moving debt around unnecessarily and avoid opening new store cards. You realize that your credit score is not a judgment of your character. It is a live map of your financial health. You start tracking your own data before the bureaus do. You verify every balance, every inquiry, and every account status. When you see a dip, you no longer panic. You look at the map, identify the variable, and adjust your behavior to correct it. You are no longer a victim of an opaque algorithm. You are the architect of your own financial profile. You have mastered the map, and now you control the destination.